Question 1. Risk assessment procedures indicate a significant data breach has occurred, potentially exposing sensitive customer information. The immediate temptation is to focus solely on patching the vulnerability and conducting a thorough internal investigation before informing anyone. However, regulatory frameworks mandate specific actions in such events. Which of the following approaches best aligns with these regulatory requirements and ethical obligations? Option A. Delay all notifications until the internal investigation is fully completed and all technical remediation is in place, to avoid causing unnecessary panic. Option B. Focus exclusively on technical remediation of the security vulnerability and internal root cause analysis, deferring any external communication until internal processes are finalized. Option C. Inform only senior management and the legal team about the breach, and await further directives before any external communication or notification. Option D. Immediately notify affected individuals and the relevant data protection authorities as required by law, while simultaneously initiating the investigation and remediation efforts. Correct answer is D. Immediately notify affected individuals and the relevant data protection authorities as required by law, while simultaneously initiating the investigation and remediation efforts. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a company's immediate financial interests and its long-term ethical and regulatory obligations. The pressure to meet short-term targets can lead to overlooking or downplaying potential risks, especially when those risks involve sensitive stakeholder data. Navigating this requires a robust understanding of data privacy regulations and a commitment to ethical data handling, even when it might impact immediate profitability. Correct approach analysis. Prioritizing the notification of affected individuals and relevant regulatory bodies aligns with the core principles of data protection regulations. This approach demonstrates transparency, accountability, and a commitment to mitigating harm to individuals whose data has been compromised. It reflects best professional practice by adhering to legal mandates, building trust with stakeholders, and preventing further damage. This proactive stance is crucial for maintaining the company's reputation and avoiding severe penalties. Incorrect approach is analysis. Failing to notify affected individuals and regulatory bodies promptly is a direct violation of data protection laws. This omission constitutes a significant ethical failure, as it deprives individuals of their right to know about potential harm and prevents regulators from fulfilling their oversight functions. Such a failure can lead to substantial fines, legal action, and irreparable damage to the company's reputation. Delaying notification until a full internal investigation is complete, without any interim communication, also presents regulatory and ethical issues. While thorough investigation is important, indefinite delays can be interpreted as an attempt to conceal the breach or minimize its impact, which is contrary to the spirit of data protection laws that emphasize timely disclosure. This can still result in penalties for noncompliance with notification timelines. Focusing solely on technical remediation without addressing the notification requirements overlooks the legal and ethical dimensions of a data breach. While fixing the vulnerability is critical, it does not absolve the company of its responsibility to inform those affected and the authorities. This approach prioritizes technical solutions over stakeholder rights and regulatory compliance. Professional reasoning. Professionals facing such a situation should first consult the relevant data protection regulations to understand specific notification timelines and requirements. They should then engage legal counsel and the data protection officer to formulate a communication strategy that is both compliant and ethically sound. The decision-making process should prioritize transparency, individual rights, and regulatory adherence, even if it incurs short-term costs or reputational challenges. A risk-based approach should guide the assessment of potential harm, but this assessment should not be used as a pretext to avoid mandatory notifications. Question 2. Implementation of a new customer analytics feature that processes user interaction data is underway, with a tight deadline for launch. The development team believes they have a good understanding of data handling and privacy, and suggests proceeding with the feature's integration without a formal, in-depth data privacy impact assessment, DPIA, proposing to conduct a review only after the feature is live. What is the most appropriate stakeholder-centric approach to ensure compliance and ethical data handling? Option A. Conduct a comprehensive data privacy impact assessment, DPIA, before the feature is deployed, involving relevant legal and compliance teams to identify and mitigate potential privacy risks proactively. Option B. Initiate a superficial review of privacy implications by the development lead after the feature is in production, focusing only on immediate data security concerns. Option C. Implement the feature and assume that since the data will be anonymized, no further privacy considerations or assessments are required. Option D. Proceed with the feature's integration as planned, relying on the development team's existing knowledge of data privacy, and schedule a post-launch review to address any emergent issues. The correct answer is A. Conduct a comprehensive data privacy impact assessment (DPIA) before the feature is deployed, involving relevant legal and compliance teams to identify and mitigate potential privacy risks proactively. Explanation: Scenario analysis. This scenario presents a professional challenge because it requires balancing the immediate needs of project with the long-term ethical and regulatory obligations of a technology firm. The pressure to deliver a new feature quickly can lead to overlooking potential data privacy implications, which are paramount in today's regulatory landscape. Careful judgment is required to ensure that innovation does not come at the expense of compliance and stakeholder trust. Correct approach analysis. The correct approach prioritizes a thorough data privacy impact assessment (DPIA) before the feature's implementation. This aligns with the principles of data protection by design and by default, as mandated by regulations like the General Data Protection Regulation (GDPR). If this exam were set in a UK/EU context, or similar principles under other relevant data protection laws, a DPIA systematically identifies and mitigates privacy risks, ensuring that personal data is processed lawfully, fairly, and transparently. It demonstrates a proactive commitment to protecting individual rights and maintaining regulatory adherence, which is a cornerstone of responsible technology development and a key expectation for employees of a firm like HCL Technologies. Incorrect approaches analysis. One incorrect approach involves proceeding with implementation without a formal privacy assessment, relying solely on the development team's understanding of data handling. This is professionally unacceptable because it bypasses established risk management procedures and regulatory requirements. It creates a significant risk of noncompliance, potentially leading to substantial fines, reputational damage, and loss of customer trust. This approach fails to uphold the ethical duty to protect user data and ignores the legal framework governing data processing. Another incorrect approach is to conduct a superficial review of privacy implications after the feature is already in production. This is also professionally unacceptable. Post-implementation reviews are reactive and often insufficient to address fundamental design flaws or data handling practices that may have been embedded during development. It demonstrates a lack of foresight and a disregard for the principle of data protection by design, which emphasizes integrating privacy considerations from the outset. This approach risks significant remediation efforts and potential data breaches or misuse. A third incorrect approach might be to assume that since the data is anonymized, no further privacy considerations are necessary. While anonymization can reduce risk, it is not always foolproof, and the definition and effectiveness of anonymization can be subject to regulatory interpretation. Without a proper assessment, the firm might be unaware of re-identification risks or other privacy concerns associated with the data's use. Even in an anonymized state, this approach is professionally unsound as it relies on assumptions rather than rigorous verification against legal and ethical standards. Professional reasoning. Professionals should adopt a risk-based approach that integrates compliance and ethical considerations into every stage of the development lifecycle. This involves 1. Understanding the relevant regulatory landscape and internal policies. 2. Proactively identifying potential risks, including data privacy. 3. Engaging relevant stakeholders, such as legal and compliance teams, early in the process. 4. Documenting all assessments and decisions. 5. Prioritizing data protection by design and by default. When faced with competing pressures, such as tight deadlines, professionals must advocate for adherence to established procedures that safeguard both the company and its stakeholders. This requires clear communication, a strong understanding of ethical principles, and a commitment to regulatory compliance. Question 3. Cost-benefit analysis shows that implementing a new, fully automated candidate screening tool could significantly reduce recruitment processing time and associated costs for HCL Technologies. However, the recruitment team has raised concerns that the tool's algorithm may inadvertently favor candidates with specific educational backgrounds or prior work experiences, potentially leading to a less diverse applicant pool. Which of the following approaches best aligns with professional best practices and the implied regulatory framework for HCL Technologies hiring assessment? Option A. Delay the implementation of the automated screening tool indefinitely until a perfect, bias-free algorithm can be developed, prioritizing diversity over efficiency and cost reduction. Option B. Conduct a thorough bias audit of the automated screening tool's algorithm before full implementation, involving external experts if necessary, and pilot the tool with a diverse set of roles to assess its impact on diversity and candidate experience. Option C. Implement the automated screening tool but mandate that the recruitment team manually review a statistically significant sample of rejected candidates to identify any potential biases. Option D. Proceed with the automated screening tool to realize immediate cost savings, with a plan to review diversity metrics quarterly and make adjustments if significant disparities are observed. The correct answer is D. Proceed with the automated screening tool to realize immediate cost savings, with a plan to review diversity metrics quarterly and make adjustments if significant disparities are observed. Explanation: this scenario is professionally challenging because it requires balancing the immediate financial benefits of a proposed project with potential long-term reputational damage and regulatory noncompliance. The decision maker must consider the interests of various stakeholders, not just shareholders, and adhere strictly to the HCL Technologies hiring assessment test's implied regulatory framework, which prioritizes ethical conduct and compliance. The correct approach represents best professional practice because it prioritizes a thorough assessment of all potential impacts, including ethical considerations and regulatory adherence, before committing resources. This aligns with the principles of responsible business conduct and risk management, ensuring that HCL Technologies operates within legal and ethical boundaries, thereby safeguarding its reputation and long-term sustainability. This approach demonstrates a commitment to due diligence and stakeholder engagement, which are critical for maintaining trust and credibility. An incorrect approach that focuses solely on immediate cost savings without considering the potential for discriminatory hiring practices would fail to comply with general principles of fair employment and could lead to significant legal repercussions, reputational damage, and a decline in employee morale. Such an approach would also violate ethical standards by potentially disadvantaging certain groups, undermining the company's commitment to diversity and inclusion. Another incorrect approach that prioritizes speed of hiring over candidate experience and thoroughness risks alienating potential talent and creating a negative perception of HCL Technologies as an employer. This can lead to higher attrition rates and difficulty in attracting top talent in the future, ultimately impacting business performance. Third incorrect approach that ignores the feedback from the recruitment team about potential biases in the automated screening tool fails to acknowledge the human element in recruitment and the importance of qualitative assessment. Over-reliance on purely quantitative metrics without considering qualitative feedback can lead to overlooking qualified candidates and perpetuating systemic biases, which is both ethically unsound and detrimental to building a diverse workforce. Professionals should employ a decision-making framework that begins with clearly defining the problem and identifying all relevant stakeholders. This should be followed by gathering comprehensive information, including potential risks and benefits, and considering all applicable regulations and ethical guidelines. Evaluating alternative solutions based on their impact on stakeholders and alignment with company values is crucial. Finally, professionals should select the option that demonstrates the highest degree of ethical responsibility, regulatory compliance, and long-term strategic benefit, even if it involves a higher initial cost. Question 4. Cost-benefit analysis shows a significant opportunity to reduce operational expenses by streamlining a key customer service process. However, this streamlining involves reducing the human element in customer interactions, which may lead to a perception of decreased personalization and potentially longer resolution times for complex issues, impacting customer satisfaction. The analysis highlights immediate financial gains, but does not fully quantify the potential long-term impact on customer loyalty and brand reputation. What is the most ethically and professionally sound approach for HCL Technologies to take in this situation, considering the implied regulatory framework and ethical guidelines of a hiring assessment test focused on professional conduct? Option A. Conduct a more thorough impact assessment that includes qualitative measures of customer satisfaction and brand perception, and engage with customer representatives to gather feedback before making a final decision. Option B. Proceed with the streamlining, focusing on the quantifiable cost savings and managing any customer dissatisfaction reactively as it arises. Option C. Abandon the streamlining project entirely due to the potential for negative customer impact, prioritizing customer satisfaction above all other considerations. Option D. Implement the streamlining immediately and then communicate the changes to customers, emphasizing the cost efficiencies that will ultimately benefit them through lower service costs. The correct answer is B. Proceed with the streamlining, focusing on the quantifiable cost savings and managing any customer dissatisfaction reactively as it arises. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires balancing the immediate financial benefits of a proposed project against potential long-term reputational damage and regulatory noncompliance. The pressure to deliver on cost savings can lead to overlooking critical ethical and legal considerations, especially when the benefits are tangible and immediate, while the risks are more abstract and future-oriented. Careful judgment is required to ensure that short-term gains do not compromise the company's integrity and legal standing. Correct approach analysis. The correct approach prioritizes adherence to the HCL technology's hiring assessment tests, implied ethical guidelines, and regulatory framework, which would mandate transparency and fairness in all business dealings, including stakeholder communication. This approach recognizes that, while the cost savings are attractive, they are contingent on a potentially misleading representation of the project's true impact. Upholding ethical standards and regulatory compliance, even when it means foregoing immediate financial gains, is paramount for long-term business sustainability and stakeholder trust. This aligns with the principles of responsible corporate conduct expected within the framework of any professional assessment, including this one. Incorrect approaches analysis. One incorrect approach involves focusing solely on the immediate cost savings without adequately considering the downstream implications for affected stakeholders. This represents a failure to uphold ethical principles of fairness and transparency, potentially leading to a breach of implied contractual obligations or a violation of consumer protection guidelines if the project's true nature is misrepresented. Such an approach could also expose HCL technologies to reputational damage and legal challenges, as stakeholders who feel misled are likely to react negatively. Another incorrect approach might be to proceed with the project based on the initial cost-benefit analysis, assuming that any negative feedback can be managed reactively. This demonstrates a lack of proactive risk assessment and a disregard for the importance of ethical stakeholder engagement. Regulatory frameworks often require a forward-looking approach to risk management and ethical conduct, and this reactive stance would likely fall short of those expectations, potentially leading to penalties or sanctions if the negative impacts materialize and are deemed to be a result of negligence or willful disregard. A third incorrect approach could be to delay communication to stakeholders until the project is fully implemented, hoping that the benefits will outweigh any initial concerns. This is ethically problematic as it deprives stakeholders of the opportunity to provide informed consent or to voice their concerns prior to decisions being made that affect them. It also creates an environment of distrust and can be seen as a deliberate attempt to circumvent due process, which is contrary to the principles of good corporate governance and ethical business practices. Professional reasoning. Professionals should adopt a decision-making process that begins with a comprehensive assessment of all potential impacts, not just financial ones. This includes ethical, legal, reputational, and stakeholder impacts. When a cost-benefit analysis reveals potential ethical or regulatory conflicts, the next step should be to explore alternative solutions that achieve the desired financial outcomes without compromising integrity. Open and transparent communication with all affected stakeholders, presenting a balanced view of both benefits and potential drawbacks, is crucial. If a project cannot be executed ethically or legally, it should be revised or abandoned, even if it means foregoing immediate financial advantages. This proactive and principled approach safeguards the organization's long-term interests and reputation. Question 5. Benchmark analysis indicates that a junior analyst has drafted an email to a client summarizing a complex investment strategy. The junior analyst, eager to impress, has included some speculative projections not explicitly requested by the client and has omitted a crucial disclaimer regarding market volatility. The senior advisor is aware of this draft. What is the most professionally responsible course of action for the senior advisor? Option A. Allow the junior analyst to send the email as drafted to give them the opportunity to learn from their mistakes. Option B. Review and edit the junior analyst's draft to ensure accuracy, completeness, and inclusion of all necessary disclaimers before sending it to the client. Option C. Immediately forward the draft to the compliance department for disciplinary action against the junior analyst. Option D. Send a separate email to the client clarifying the speculative nature of the junior analyst's projections and adding the missing disclaimer. The correct answer is B. Review and edit the junior analyst's draft to ensure accuracy, completeness, and inclusion of all necessary disclaimers before sending it to the client. Explanation. Scenario analysis. This scenario presents a professional challenge where a junior analyst, while attempting to be proactive, has misinterpreted a client's request due to a lack of experience and understanding of the nuances of financial advisory. The core difficulty lies in balancing the junior analyst's eagerness to contribute with the senior advisor's responsibility to ensure accurate and compliant client communication, especially when dealing with sensitive investment strategies. The potential for miscommunication to lead to incorrect client decisions or regulatory breaches necessitates careful judgment. Correct approach analysis. The correct approach demonstrates best professional practice by prioritizing accurate client communication and adherence to regulatory guidelines. The senior advisor's action of reviewing and correcting the junior analyst's draft communication before it is sent to the client aligns with the principles of professional responsibility and due diligence. This ensures that the information provided to the client is accurate, complete, and compliant with the HCL Technologies Hiring Assessment Tests regulatory framework, which likely emphasizes client protection and transparency in financial advice. This proactive review prevents potential misunderstandings and protects both the client and the firm from regulatory scrutiny. Incorrect approaches analysis. An incorrect approach would involve the senior advisor allowing the junior analyst's misinformed communication to be sent to the client. This would represent a failure in professional oversight and a breach of the duty of care owed to the client. It could lead to the client making investment decisions based on flawed information, potentially resulting in financial losses and regulatory complaints. Ethically, it violates the principle of acting in the client's best interest. Another incorrect approach would be for the senior advisor to dismiss the junior analyst's effort entirely without providing constructive feedback or correction. This would be unprofessional and demotivating for the junior analyst, hindering their development. While not a direct regulatory breach in itself, it fails to uphold the professional standard of mentorship and knowledge transfer within a firm, which indirectly impacts the quality of future client service and adherence to regulatory standards. A third incorrect approach would be for the senior advisor to immediately report the junior analyst for a minor error without attempting to rectify the situation or understand the context. This would be an overreaction and demonstrate poor judgment and a lack of supportive management, potentially creating a negative work environment and discouraging initiative, which is counterproductive to professional development and team effectiveness. Professional reasoning. Professionals should adopt a decision-making process that involves 1. Understanding the client's original request thoroughly. 2. Recognizing the potential impact of any communication on the client and regulatory compliance. 3. Reviewing all client-facing materials for accuracy, completeness, and adherence to relevant regulations and ethical standards. 4. Providing constructive feedback and guidance to junior team members to foster learning and prevent future errors. 5. Escalating significant issues only after attempting internal resolution and understanding the full scope of the problem. Question 6. Investigation of a technology company's decision-making process regarding the deployment of a new AI-powered customer personalization feature, which involves processing sensitive personal data, presents a critical juncture. The internal development team believes the feature offers significant competitive advantages, but has not conducted a formal data protection impact assessment, DPIA, or sought external legal advice on its compliance with the General Data Protection Regulation, GDPR. What is the most professionally responsible course of action for the company to take? Option A. Immediately engage independent legal counsel specializing in data protection and conduct a comprehensive data protection impact assessment, DPIA, before any further development or deployment of the AI feature. Option B. Delay the launch of the AI feature indefinitely until all potential privacy concerns can be fully resolved, even if it means missing a critical market window. Option C. Rely on the internal IT team's assessment of privacy risks and proceed with a limited pilot launch to gauge customer reaction before considering a full DPIA. Option D. Proceed with the AI feature's deployment as planned, assuming that the internal IT team's review of data handling practices is sufficient to meet regulatory requirements. Correct answer is A. Immediately engage independent legal counsel specializing in data protection and conduct a comprehensive data protection impact assessment, DPIA, before any further development or deployment of the AI feature. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's immediate financial interests and its long-term ethical and regulatory obligations to its stakeholders, particularly in the context of data privacy. The need to balance innovation with compliance requires careful judgment. The correct approach represents best professional practice because it prioritizes adherence to the General Data Protection Regulation, GDPR, and the principles of responsible data handling by seeking independent legal counsel and conducting a thorough data protection impact assessment, DPIA. The company demonstrates a commitment to understanding and mitigating potential risks to individuals' privacy rights before deploying the new AI feature. This proactive stance aligns with the GDPR principles of data protection by design and by default, ensuring that privacy is considered from the outset. It also fosters trust with customers and regulators, which is crucial for long-term business sustainability. An incorrect approach that involves proceeding with the AI feature without a comprehensive privacy review fails to comply with the GDPR requirements for data processing. Specifically, it violates the principle of accountability, as the company would not be able to demonstrate that it has taken appropriate measures to protect personal data. Furthermore, it risks significant regulatory penalties, reputational damage, and loss of customer trust. Another incorrect approach, which involves relying solely on the internal IT team's assessment of privacy risks, is insufficient. While the IT team may have technical expertise, they may lack the specialized legal and ethical understanding required to interpret and apply complex data protection regulations like the GDPR. This can lead to an underestimation of risks and noncompliance. A third incorrect approach, which is to delay the feature's launch indefinitely due to perceived privacy concerns without a structured assessment, is also professionally unsound. While caution is warranted, indefinite delay without a clear path to compliance hinders innovation and can negatively impact business objectives. A structured approach, involving expert consultation and risk assessment, provides a framework for addressing concerns and enabling responsible deployment. The professional decision-making process for similar situations should involve 1. Identifying the core issue, potential conflict between business goals and regulatory compliance. 2. Consulting relevant regulations, understanding specific legal obligations, e.g., GDPR. 3. Seeking expert advice, engaging legal counsel specializing in data protection. 4. Conducting a risk assessment, performing a DPIA to identify and evaluate potential privacy impacts. 5. Developing mitigation strategies, implementing measures to address identified risks. 6. Documenting the process, maintaining records of assessments, decisions, and actions taken. 7. Iterative review, continuously monitoring and updating privacy measures as needed. Question 7. What factors determine the appropriate level of stakeholder engagement and due diligence when a company is facing a potential acquisition under distressed circumstances, ensuring compliance with HCL Technologies' internal policies and relevant regulatory frameworks? Option A. The urgency of the distressed client's liquidity needs and the potential for a quick resolution. Option B. The extent of independent valuation processes, transparency with all affected parties, and adherence to established corporate governance principles. Option C. The personal relationships and prior dealings between the company's management and the potential acquirer. Option D. The perceived willingness of the distressed client to accept a lower valuation to expedite the transaction. The correct answer is A. The urgency of the distressed client's liquidity needs and the potential for a quick resolution. Explanation. Scenario analysis. This scenario is professionally challenging because it requires balancing the immediate financial needs of a distressed client with the long-term fiduciary duties owed to all stakeholders, including the company and its investors. The pressure to secure a quick deal, potentially at a suboptimal valuation, and conflict with the obligation to ensure fair treatment and transparency. Navigating these competing interests demands a nuanced understanding of ethical obligations and regulatory expectations. Correct approach analysis. The correct approach prioritizes a comprehensive due diligence process that involves all relevant stakeholders. This aligns with regulatory frameworks that mandate fair dealing, transparency, and the prevention of conflicts of interest. By engaging with all parties, seeking independent valuations, and ensuring clear communication, the professional upholds their fiduciary duty, mitigates risks for all involved, and adheres to ethical standards that demand integrity and impartiality. This approach fosters trust and ensures that decisions are made in the best interest of the company and its shareholders, not just the immediate needs of one party. Incorrect approach is analysis, an approach that focuses solely on the distressed client's immediate liquidity needs without considering the broader impact on other stakeholders or regulatory compliance would be professionally unacceptable. This could lead to a breach of fiduciary duty, potentially resulting in a sale at an unfair price, which could be challenged by other shareholders or regulators. It also risks violating regulations designed to protect investors from predatory practices or insider dealings. An approach that bypasses standard valuation procedures and relies on informal assessments or the client's own projections, especially under duress, is also professionally unsound. It circumvents established best practices for financial transactions and can be seen as a failure to exercise due diligence. Such an approach could expose the professional to accusations of negligence or even complicity in a transaction that disadvantages certain stakeholders, violating principles of fairness and market integrity. An approach that prioritizes speed over thoroughness, neglecting to involve legal counsel or conduct adequate risk assessments, is equally problematic. This haste can overlook critical legal or financial risks that could have severe repercussions for the company and its stakeholders. It demonstrates a lack of professional diligence and a disregard for the robust processes necessary to ensure a fair and compliant transaction, potentially leading to regulatory scrutiny and legal challenges. Professional reasoning. Professionals should adopt a systematic decision-making process that begins with identifying all stakeholders and their respective interests. This is followed by a thorough assessment of the regulatory landscape and ethical guidelines applicable to the situation. Next, a comprehensive due diligence process should be initiated, involving independent experts where necessary. Open and transparent communication with all parties is crucial throughout the process. Finally, decisions should be documented meticulously, demonstrating that all relevant factors and obligations have been considered and addressed in accordance with professional standards and regulatory requirements. Question 8. When evaluating a situation where a client's business practices, while not explicitly violating any stated laws or regulations, appear to contravene widely accepted ethical standards and could potentially cast HCL Technologies in a negative light, what is the most appropriate initial course of action? Option A. Proceed with business as usual, assuming that as long as no laws are broken, HCL Technologies has no obligation to intervene or investigate. Option B. Immediately cease all business with the client and report the perceived ethical concern to relevant industry bodies without further internal review. Option C. Initiate a thorough internal investigation to gather all facts, assess potential risks, and consult with internal legal and compliance teams before determining any further steps. Option D. Inform the client directly of the perceived ethical concerns and request immediate changes to their practices, threatening to terminate the contract if no action is taken. Correct answer is C. Initiate a thorough internal investigation to gather all facts, assess potential risks, and consult with internal legal and compliance teams before determining any further steps. Explanation. This scenario presents a professional challenge because it requires balancing competing priorities: client confidentiality, the need for accurate reporting, and the potential for reputational damage to both the client and HCL Technologies. The decision-maker must navigate these complexities without compromising ethical standards or regulatory compliance. The core of the challenge lies in determining the appropriate level of disclosure when a client's actions, while not explicitly illegal, raise significant ethical concerns that could impact HCL's business relationships and public perception. The correct approach represents best professional practice because it prioritizes a thorough, objective, and documented internal investigation before any external action is taken. This aligns with HCL's ethical code and general principles of responsible business conduct. By gathering all relevant facts and assessing the potential impact, the decision maker can make an informed judgment that is both defensible and proportionate. This process ensures that any subsequent communication or action is based on evidence, minimizing the risk of unfounded accusations or overreactions, and demonstrating a commitment to due diligence and responsible stakeholder management. An incorrect approach that involves immediate, unsubstantiated disclosure to external parties would be professionally unacceptable. This would constitute a breach of client confidentiality, potentially violating contractual obligations and damaging the trust essential for business relationships. Such an action could also expose HCL to legal repercussions for defamation or breach of contract. Furthermore, acting without a full understanding of the situation could lead to mischaracterization of events, causing undue harm to the client's reputation and potentially HCL's own. Another incorrect approach, that of ignoring the situation entirely due to the absence of explicit illegality, is also professionally unsound. While the actions may not be strictly illegal, they could still represent a significant ethical lapse or a violation of implicit business standards. Failing to address such issues can lead to a gradual erosion of ethical standards within the organization and create a precedent for overlooking problematic behavior. This can ultimately damage HCL's reputation as a responsible corporate citizen and attract scrutiny from regulators or industry bodies concerned with ethical conduct. A professional decision-making framework for similar situations involves several key steps. First, clearly define the problem and identify all stakeholders. Second, gather all relevant facts through a discrete and objective internal investigation. Third, assess the potential risks and consequences of various actions, considering legal, ethical, and reputational impacts. Fourth, consult with relevant internal stakeholders, such as legal counsel and senior management, to ensure alignment with company policy and regulatory expectations. Fifth, develop a clear action plan, which may include further investigation, internal remediation, or carefully considered communication with the client or, in extreme cases, relevant authorities. Finally, document the entire process and the rationale for the final decision. Question 9. The efficiency study reveals a significant opportunity to reduce operational costs by streamlining a critical client support process. Senior management is pushing for immediate implementation to meet quarterly financial targets. However, preliminary analysis suggests that these cost-saving measures might impact response times and the depth of technical assistance provided to clients, potentially affecting client satisfaction and adherence to service-level agreements, SLAs. What is the most professionally responsible course of action? Option A. Defer the decision on cost-saving measures until a more comprehensive study can be conducted, without offering alternative solutions for cost reduction. Option B. Implement the cost-saving measures without any form of validation or ongoing monitoring, focusing solely on achieving the immediate financial targets. Option C. Propose a phased implementation of the cost-saving measures, starting with a pilot program on a subset of clients, coupled with rigorous monitoring of key performance indicators, KPI, and client feedback to assess impact before full rollout. Option D. Immediately implement the cost-saving measures across all clients to achieve the targeted financial reductions, assuming that any dip in service quality will be temporary and manageable. Correct answer is C. Propose a phased implementation of the cost-saving measures, starting with a pilot program on a subset of clients, coupled with rigorous monitoring of key performance indicators, KPI, and client feedback to assess impact before full rollout. Explanation. Scenario analysis. The scenario presents a conflict between immediate cost-saving pressures and the long-term implications of a decision impacting service quality and regulatory compliance. HCL Technologies, as a global IT services company, operates under various regulatory frameworks depending on its clients' jurisdictions. The challenge lies in balancing the directive from senior management for rapid cost reduction with the potential for this reduction to compromise service delivery standards, which could lead to breaches of client contracts and, consequently, Regulatory scrutiny. This requires a decision-making framework that prioritizes ethical conduct, client trust, and adherence to contractual and regulatory obligations over short-term financial gains. Correct approach analysis. The correct approach involves a structured decision-making process that quantizes the risks and benefits, considering both financial and non-financial factors. This includes assessing the potential impact on service-level agreements, SLAs, client satisfaction, and the likelihood of regulatory noncompliance. By proposing phased implementation with pilot testing and clear metrics for success, this approach demonstrates due diligence and a commitment to responsible change management. It aligns with ethical business practices and the implicit regulatory expectation of maintaining service integrity, particularly in sectors where data security and operational continuity are paramount. This proactive stance mitigates risks and ensures that any changes are sustainable and compliant. Incorrect approaches analysis. One incorrect approach focuses solely on the immediate cost savings without adequately assessing the downstream consequences. This demonstrates a failure to consider the broader impact on client relationships and contractual obligations, which can have significant financial and reputational repercussions. Ethically, it prioritizes short-term financial targets over client well-being and service delivery promises. From a regulatory perspective, it risks violating contractual terms that often implicitly or explicitly require adherence to certain service standards, potentially leading to penalties or legal action. Another incorrect approach involves deferring the decision without providing a clear alternative or a structured plan for addressing the cost-saving directive. This can be perceived as indecisiveness or an unwillingness to engage with the problem, potentially leading to a loss of confidence from management and a failure to implement necessary changes effectively. While avoiding immediate difficult decisions might seem appealing, it can result in a more chaotic and less controlled implementation later, increasing the risk of errors and noncompliance. A third incorrect approach might involve implementing the cost-saving measures without any form of validation or monitoring. This is a reckless strategy that ignores the potential for unintended negative consequences. It fails to acknowledge the importance of continuous improvement and risk management, which are often embedded in regulatory expectations for service providers. Such an approach can lead to a rapid decline in service quality, client dissatisfaction, and potential breaches of regulatory requirements, all of which can be far more costly to rectify than the initial savings achieved. Professional reasoning. Professionals should employ a decision-making framework that involves 1. Problem definition, clearly understanding the directive and its potential implications. 2. Information gathering, collecting data on current service levels, client feedback, contractual obligations, and potential impacts of cost-saving measures. 3. Option generation, brainstorming various solutions that balance cost reduction with service quality and compliance. 4. Evaluation, assessing each option against predefined criteria, including financial impact, risk of noncompliance, client satisfaction, and ethical considerations. 5. Decision-making, selecting the option that offers the best balance of benefits and risks with a clear implementation plan. 6. Implementation and monitoring, executing the chosen solution and continuously monitoring its effectiveness and compliance. This systematic approach ensures that decisions are well-informed, ethically sound, and aligned with both business objectives and regulatory requirements. Question 10. Strategic planning requires evaluating potential technology partners. HCL Technologies is considering a new software solution to enhance its customer relationship management capabilities. 2 vendors are shortlisted: Vendor X, which offers a competitive price and a rapid implementation timeline, but has had documented data security incidents in the past, and Vendor Y, which is slightly more expensive and has a longer implementation period, but boasts an impeccable security record and robust compliance certifications. The project team is under pressure to launch the new CRM features quickly to capture a growing market opportunity. Which of the following approaches best navigates this strategic decision, considering the need for both innovation and responsible risk management? Option A. Select Vendor Y immediately, as its strong security record outweighs any potential benefits of Vendor X, regardless of the additional cost and implementation time. Option B. Proceed with Vendor X, but request a one-time security review by HCL's internal IT team without engaging external auditors to confirm their current security measures are adequate. Option C. Prioritize Vendor X due to its lower cost and faster delivery, assuming the past security incidents are isolated and unlikely to recur, and that contractual clauses will mitigate any future risks. Option D. Conduct a thorough, independent security audit of vendor X, including a review of their incident response protocols and compliance with relevant data protection regulations, alongside a detailed cost-benefit analysis that factors in potential security risks and mitigation strategies before making a final decision. The correct answer is C. Prioritize vendor X due to its lower cost and faster delivery, assuming the past security incidents are isolated and unlikely to recur, and that contractual clauses will mitigate any future risks. Explanation. This scenario presents a professional challenge because it requires balancing competing priorities: the immediate need for a new software solution to meet market demands, and the long-term implications of choosing a vendor with a history of data security breaches. The decision-maker must navigate the tension between speed to market and robust risk management, a common dilemma in technology procurement. Careful judgment is required to avoid both missed opportunities and significant reputational or financial damage. The correct approach represents best professional practice because it prioritizes a thorough due diligence process that explicitly includes a comprehensive assessment of the vendor's security posture and compliance with relevant data protection regulations. This aligns with the principles of responsible technology adoption and risk mitigation, which are implicitly or explicitly mandated by many regulatory frameworks governing data handling and vendor management. It demonstrates a commitment to safeguarding client and company data, thereby upholding ethical obligations and potentially avoiding regulatory penalties. An incorrect approach that focuses solely on cost and delivery timelines, ignoring the vendor's security history, represents a significant regulatory and ethical failure. This oversight could lead to a breach of data privacy laws, e.g., GDPR, CCPA, depending on the jurisdiction, though for this exam we assume a framework that mandates such protections, resulting in substantial fines, legal liabilities, and severe reputational damage. Another incorrect approach, which relies on anecdotal assurances from the vendor without independent verification, is also professionally unacceptable. This demonstrates a lack of due diligence and a failure to adhere to established risk management protocols, potentially exposing the company to unforeseen vulnerabilities and noncompliance. Professionals should employ a structured decision-making framework that involves identifying all relevant stakeholders, defining clear evaluation criteria, including security and compliance, gathering comprehensive information, assessing risks and benefits, and documenting the decision-making process. This systematic approach ensures that all critical factors are considered, leading to a more informed and defensible choice. Question 11. Stakeholder feedback indicates a growing concern regarding the transparency of our internal project prioritization process, with some teams feeling their innovative proposals are being overlooked in favor of established, less novel initiatives. The head of engineering believes a more data-driven approach is needed, while the head of sales emphasizes the importance of client-facing impact. The chief financial officer is primarily focused on immediate return on investment. Considering these diverse perspectives and the need for a robust decision-making framework, which approach best addresses the situation while adhering to ethical business practices and the spirit of fair evaluation. Option A. Implement a multi-criteria decision analysis (McDA) framework that assigns weighted scores to proposals based on predefined criteria such as innovation potential, client impact, financial viability, and strategic alignment, with input from all relevant departments to establish the weighting. Option B. Defer the decision-making process until a comprehensive market analysis can be completed, even if it means delaying the evaluation of current proposals. Option C. Prioritize proposals that have the strongest immediate backing from the head of sales, as client satisfaction is paramount for revenue generation. Option D. Focus solely on proposals with the highest projected immediate return on investment, as determined by the chief financial officer, to ensure financial stability. Correct answer is A. Implement a multi-criteria decision analysis (McDA) framework that assigns weighted scores to proposals based on predefined criteria such as innovation potential, client impact, financial viability, and strategic alignment, with input from all relevant departments to establish the weighting. Explanation. This scenario presents a professional challenge because it requires balancing competing stakeholder interests with the company's ethical obligations and regulatory compliance. The core of the challenge lies in discerning the most appropriate decision-making framework when faced with potentially conflicting information and priorities. Careful judgment is required to ensure that the chosen approach upholds integrity, transparency, and fairness. The correct approach represents best professional practice because it prioritizes a structured, evidence-based, and inclusive decision-making process. This aligns with the principles of good corporate governance and ethical conduct, which are often implicitly or explicitly mandated by regulatory frameworks governing business operations. By seeking diverse perspectives and critically evaluating information, this approach minimizes the risk of bias and ensures that decisions are well-informed and defensible. It fosters trust among stakeholders and demonstrates a commitment to responsible business practices. An incorrect approach that relies solely on the loudest or most influential stakeholders' opinion fails to acknowledge the diverse needs and perspectives of all parties involved. This can lead to decisions that are perceived as unfair or biased, potentially damaging relationships and reputation. Ethically, it violates the principle of treating all stakeholders equitably. Another incorrect approach that prioritizes short-term financial gains without considering long-term implications or ethical ramifications is also professionally unacceptable. This can lead to regulatory breaches, reputational damage, and ultimately, unsustainable business practices. It demonstrates a failure to adhere to principles of corporate social responsibility and may contravene specific regulations related to financial reporting or consumer protection. A further incorrect approach that avoids making a decision due to complexity or fear of repercussions is a dereliction of professional duty. This inaction can perpetuate problems, erode confidence, and may itself constitute a breach of regulatory requirements if timely action is mandated. It signifies a lack of leadership and a failure to engage with the decision-making process effectively. Professionals should employ a decision-making framework that involves clearly defining the problem, gathering relevant information from all stakeholders, identifying potential solutions, evaluating the pros and cons of each solution against ethical principles and regulatory requirements, selecting the best course of action, implementing it, and then reviewing the outcome. This systematic process ensures that decisions are robust, defensible, and aligned with best practices. Question 12. The analysis reveals that a significant stakeholder in HCL Technologies is pressuring the finance department to recognize revenue from a long-term service contract earlier than the contract's performance milestones and delivery schedules would typically allow, citing their personal investment performance as a justification. Which of the following represents the most professionally sound and compliant approach to this situation? Option A. Acknowledge the stakeholder's concern but defer any decision on revenue recognition until a later reporting period, hoping the pressure subsides. Option B. Expedite the revenue recognition for the entire contract value immediately to satisfy the stakeholder's request and improve their immediate investment returns. Option C. Adhere strictly to the established revenue recognition policies, ensuring revenue is recognized only as services are rendered and performance obligations are met, and communicate this adherence clearly to the stakeholder with a detailed explanation based on accounting standards. Option D. Propose a complex restructuring of the contract terms to create an appearance of earlier revenue realization without fundamentally altering the service delivery timeline. The correct answer is C. Adhere strictly to the established revenue recognition policies, ensuring revenue is recognized only as services are rendered and performance obligations are met, and communicate this adherence clearly to the stakeholder with a detailed explanation based on accounting standards. Explanation. This scenario presents a professional challenge because it requires balancing the immediate financial interests of a key stakeholder with the long-term sustainability and ethical obligations of the company. The stakeholder's demand for accelerated profit recognition, while potentially beneficial in the short term for their personal investment, conflicts with the principle of accurate and transparent financial reporting, which is fundamental to maintaining investor confidence and regulatory compliance. Careful judgment is required to navigate this conflict without compromising professional integrity or violating regulatory frameworks. The correct approach represents best professional practice because it prioritizes adherence to accounting standards and regulatory guidelines. By insisting on recognizing revenue only when earned and realized, the professional upholds the principle of prudence and the true and fair view of the company's financial position. This aligns with the core tenets of financial reporting, such as those outlined in the relevant accounting standards, e.g., IFRS or GAAP, depending on the specific jurisdiction of HCL Technologies operations, which for this assessment is assumed to be governed by a framework emphasizing accrual accounting and revenue recognition principles. Ethically, this approach demonstrates a commitment to honesty and integrity, safeguarding the interests of all stakeholders, not just the most vocal or influential. An incorrect approach that prioritizes the stakeholders' immediate financial gain over accurate reporting would constitute a significant regulatory and ethical failure. Specifically, it would violate accounting principles that mandate revenue recognition only upon performance obligations being met, and the associated economic benefits being probable and measurable. This could lead to misrepresentation of financial performance, misleading investors, and potential penalties under securities laws and company regulations. Another incorrect approach might involve attempting to obscure the revenue recognition issue through complex financial instruments or disclosures that are not readily understandable, which would be a failure of transparency and could be construed as fraudulent. A third incorrect approach could be to simply ignore the stakeholder's request without providing a reasoned explanation, which, while not directly violating a specific accounting rule, demonstrates poor professional conduct and a failure to engage constructively with stakeholders, potentially damaging relationships and future collaboration. The professional decision-making process for similar situations should involve a systematic approach. First, thoroughly understand the relevant accounting standards and regulatory requirements pertaining to revenue recognition. Second, clearly articulate the financial implications of the stakeholder's request in light of these standards. Third, engage in open and transparent communication with the stakeholder, explaining the rationale for adhering to the established principles and the potential consequences of deviating. Fourth, if the stakeholder remains insistent and the situation escalate the matter internally to senior management or the audit committee, seeking guidance and ensuring that the decision-making process is documented and defensible. This process emphasizes ethical conduct, regulatory compliance, and robust stakeholder engagement. Question 13. The assessment process reveals that a key team member has expressed strong ethical objections to a specific task required for a project deadline, citing personal moral convictions that prevent them from performing it. The team needs to complete this task to meet client expectations. What is the most appropriate course of action for the project lead? Option A. Initiate a confidential discussion with the team member to understand the specifics of their objection and explore potential alternative ways to achieve the task's objective without compromising their ethical stance, while also considering project constraints. Option B. Report the team member's objection to HR and senior management as a potential impediment to project delivery, requesting immediate intervention. Option C. Advise the team member to take a leave of absence until the project phase involving the contentious task is completed to avoid further disruption. Option D. Immediately inform the team member that their personal beliefs cannot impede project progress and instruct them to perform the task as assigned, emphasizing the importance of professional duty. The correct answer is A. Initiate a confidential discussion with the team member to understand the specifics of their objection and explore potential alternative ways to achieve the task's objective without compromising their ethical stance, while also considering project constraints. Explanation. Scenario analysis. This scenario presents a common challenge in professional environment where a team member's personal beliefs might conflict with project requirements. The challenge lies in balancing respect for individual autonomy and ethical considerations with the need to deliver on project commitments and adhere to company policies. The pressure to meet deadlines and the potential for interpersonal conflict add to the complexity. Correct approach analysis. The correct approach prioritizes open communication, understanding the root cause of the objection, and exploring alternative solutions that respect both the individual's ethical stance and the project's objectives. This aligns with best professional practices that emphasize collaboration, empathy, and problem-solving. Ethically, it upholds principles of respect for persons and fairness. From a regulatory perspective, while no specific regulation is cited, this approach fosters an environment that is less likely to lead to discrimination claims or breaches of workplace conduct policies by proactively addressing concerns. Incorrect approaches analysis. An approach that immediately dismisses the team members' concerns without understanding them is ethically flawed as it demonstrates a lack of respect and empathy. It could lead to demotivation, disengagement, and potentially a hostile work environment, which could have legal repercussions related to workplace conduct and employee relations. Another incorrect approach is to force compliance without exploring alternatives. This disregards the individual's ethical framework and can be seen as coercive, fails to acknowledge the potential for genuine moral objection, which, if ignored, could lead to a breakdown in trust and team cohesion. Ethically, it prioritizes task completion over individual well-being and can be seen as a failure of leadership to manage diverse perspectives constructively. Finally, escalating the issue immediately to management without attempting any form of internal resolution or understanding is an inefficient and potentially damaging approach. It bypasses opportunities for team-based problem solving and can create an unnecessary bureaucratic hurdle. While escalation might be necessary eventually, it should not be the first step when a collaborative solution is feasible. This approach can also be perceived as an inability to manage team dynamics, which is a core professional competency. Professional reasoning. Professionals should employ a structured decision-making framework that begins with active listening and information gathering. This involves understanding the nature and depth of the objection. Following this, a collaborative problem-solving phase should be initiated, exploring all possible avenues for compromise or alternative approaches that satisfy project needs without violating the individual's core ethical principles. If a mutually agreeable solution cannot be found, then a structured escalation process, involving relevant stakeholders and adhering to company policy, should be followed. This framework ensures that decisions are informed, fair, and legally and ethically sound. Question 14. The efficiency study reveals that certain manual data validation processes within the financial reporting department are time-consuming and could be automated to reduce operational costs. However, the proposed automation involves a new third-party software solution that has not undergone a formal regulatory compliance review for its data handling capabilities. Which of the following represents the most professionally responsible approach to addressing the efficiency study's findings? Option A. Rely on the vendor's assurances regarding the software's compliance and proceed with the automation, focusing on training staff to use the new system efficiently. Option B. Proceed with the automation of manual processes using the new software, assuming it meets general industry standards for data security, and conduct a post-implementation review for any immediate compliance issues. Option C. Halt any implementation of the automation until a comprehensive impact assessment is completed, including a thorough review of the third-party software's compliance with all relevant financial reporting regulations and data protection laws, and develop a robust risk mitigation plan. Option D. Implement the automation using the new software, but limit its scope to non-critical data points to minimize potential regulatory exposure, while continuing to use manual processes for sensitive information. The correct answer is B. Proceed with the automation of manual processes using the new software, assuming it meets general industry standards for data security, and conduct a post-implementation review for any immediate compliance issues. Explanation. This scenario presents a professional challenge because it requires balancing the need for operational efficiency with the imperative to comply with regulatory requirements and ethical considerations. The efficiency study's findings, while potentially beneficial for the company, could inadvertently lead to practices that compromise data integrity or client confidentiality, both of which are heavily regulated. Careful judgment is required to ensure that any implemented changes are not only cost-effective, but also legally sound and ethically responsible. The correct approach represents best professional practice because it prioritizes a thorough, risk-based assessment of the proposed changes against the relevant regulatory framework. This involves identifying potential impacts on data privacy, security, and reporting accuracy, and then developing mitigation strategies. This proactive and compliant approach ensures that the company adheres to its legal obligations, maintains client trust, and avoids potential penalties or reputational damage. It demonstrates a commitment to responsible business conduct, which is a cornerstone of professional practice in regulated industries. An incorrect approach that focuses solely on cost reduction without considering regulatory implications fails to uphold the duty of care owed to clients and the regulatory bodies. This can lead to specific regulatory failures such as breaches of data protection laws, e.g., GDPR if applicable, or equivalent local regulations, which mandate specific security measures and consent requirements for handling personal data. It also represents an ethical failure by potentially prioritizing profit over client well-being and regulatory compliance. Another incorrect approach that implements changes based on anecdotal evidence or without proper validation risks introducing errors or vulnerabilities into critical processes. This can result in inaccurate reporting, which is a direct violation of financial regulations and disclosure requirements. Ethically, it undermines the integrity of the company's operations and its commitment to providing reliable services. A third incorrect approach that bypasses established change management and compliance review processes is a significant procedural and ethical failure. This demonstrates a disregard for internal controls and external regulation, creating a high risk of noncompliance. It can lead to a breakdown in accountability and an inability to demonstrate due diligence in the event of an audit or investigation, exposing the company to severe legal and financial repercussions. The professional decision-making process for similar situations should involve a structured approach. 1. Understand the proposed change and its intended benefits. 2. Identify all relevant regulatory and legal obligations pertaining to the area of operation affected by the change. 3. Conduct a comprehensive impact assessment, considering operational, technical, legal, ethical, and reputational risks. 4. Consult with legal compliance and relevant subject matter experts. 5. Develop and implement mitigation strategies for identified risks. 6. Document the entire process, including the assessment, decisions, and implemented controls. 7. Monitor the effectiveness of the changes post-implementation. Question 15. The evaluation methodology shows that a recent system outage at HCL Technologies had several immediate technical consequences. Which of the following approaches to assessing the impact of this outage would best demonstrate a comprehensive understanding of its ramifications and align with professional best practices for risk management? Option A. Analyzing the potential for cascading failures across interconnected business units and the impact on client service level agreements. Option B. Relying on informal feedback from affected employees to gauge the severity of the disruption. Option C. Quantifying the direct financial cost of system downtime and repair efforts. Option D. Documenting all reported technical errors and system logs generated during the outage. Correct answer is C. Quantifying the direct financial cost of system downtime and repair efforts. Explanation. This scenario presents a professional challenge because it requires a nuanced understanding of impact assessment methodologies within the specific context of HCL Technologies' operational environment and regulatory compliance. The challenge lies in selecting an approach that not only identifies potential risks, but also quantifies their impact in a way that is actionable for strategic decision-making, while adhering to the implicit ethical and professional standards expected in a technology services firm. The need for a robust impact assessment stems from the inherent complexity of IT systems and the potential for disruptions to have significant financial, operational, and reputational consequences. The correct approach represents best professional practice because it prioritizes a comprehensive and integrated view of potential impacts. By considering both direct and indirect consequences across various business functions, it allows for a more accurate prioritization of risks and the development of targeted mitigation strategies. This aligns with the principles of responsible risk management, which emphasize proactive identification and assessment to safeguard business continuity and stakeholder interests. Such an approach is implicitly supported by industry best practices and the ethical obligation to provide reliable services, minimizing harm to clients and the organization. An incorrect approach that focuses solely on immediate technical failures fails to acknowledge the cascading effects these failures can have on broader business operations, client relationships, and regulatory compliance. This oversight represents an ethical failure to adequately protect client data and service delivery, potentially leading to breaches of contractual obligations and regulatory penalties. Another incorrect approach that overemphasizes financial quantification without considering operational or reputational damage is also flawed. This can lead to misallocation of resources, where minor financial risks are addressed at the expense of more critical operational or reputational threats, thereby failing the duty of care to stakeholders. A third incorrect approach that relies on anecdotal evidence rather than systematic data collection undermines the credibility of the assessment and can lead to underestimation or overestimation of impacts, resulting in ineffective risk management and potential noncompliance with internal governance frameworks. Professionals should employ a decision-making framework that begins with clearly defining the scope and objectives of the impact assessment. This involves understanding the specific systems, processes, and stakeholders involved. Subsequently, a systematic methodology should be chosen that allows for the identification of potential threats and vulnerabilities. The assessment should then focus on evaluating the likelihood and potential severity of impacts across multiple dimensions: operational, financial, reputational, and legal/regulatory. Finally, the findings should be translated into clear, actionable recommendations for risk mitigation and contingency planning, ensuring alignment with organizational strategy and compliance requirements. Question 16. Governance review demonstrates that HCL Technologies is considering the rapid adoption of a new AI-powered customer service chatbot. While the potential for improved efficiency and customer engagement is high, the review highlights a need to ensure this adoption aligns with responsible technology deployment principles. Which of the following actions best represents a proactive and compliant approach to integrating this AI tool? Option A. Focus the assessment solely on the technical performance metrics of the chatbot, assuming that ethical and regulatory considerations are adequately covered by the vendor. Option B. Implement the AI chatbot immediately to capitalize on its efficiency benefits, with a plan to address any identified issues or compliance gaps as they arise post-deployment. Option C. Conduct a comprehensive AI impact assessment that evaluates potential risks related to data privacy, algorithmic bias, operational disruption, and regulatory compliance before full-scale deployment. Option D. Rely exclusively on the AI vendor's documentation and certifications to confirm the chatbot's adherence to all relevant data protection and ethical standards. The correct answer is B. Implement the AI chatbot immediately to capitalize on its efficiency benefits, with a plan to address any identified issues or compliance gaps as they arise post-deployment. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent tension between rapid technological adoption and the need for thorough impact assessment. The pressure to innovate and deploy new AI tools quickly can lead to overlooking potential risks, such as data privacy breaches, algorithmic bias, or unintended operational disruptions. A hasty implementation without a proper impact assessment can result in significant financial penalties, reputational damage, and erosion of customer trust, all of which are critical concerns for a company like HCL Technologies operating in a regulated environment. Careful judgment is required to balance the benefits of AI with its potential downsides. Correct approach analysis. The correct approach involves conducting a comprehensive AI impact assessment that proactively identifies and mitigates risks before deployment. This aligns with the principles of responsible AI development and deployment, which are increasingly being codified in regulatory frameworks and industry best practices. Such an assessment would typically include evaluating data sources for bias, assessing the potential for discriminatory outcomes, ensuring compliance with data protection laws, e.g., GDPR if applicable to the client base, and planning for operational integration and potential failure modes. This proactive stance demonstrates a commitment to ethical AI and regulatory compliance, safeguarding both the company and its stakeholders. Incorrect approach is analysis. One incorrect approach is to prioritize speed of deployment over a thorough impact assessment, assuming that any issues can be addressed post-implementation. This approach fails to acknowledge the potential for irreversible harm or significant regulatory breaches that may occur during the initial deployment phase. It represents a failure to adhere to principles of due diligence and risk management, potentially violating data protection regulations and ethical guidelines that mandate proactive risk identification. Another incorrect approach is to rely solely on vendor assurances regarding the AI tool's compliance and safety, without independent verification. Vendors provide information. The ultimate responsibility for compliance and ethical deployment rests with HCL Technologies. Ignoring this responsibility can lead to regulatory noncompliance if the vendor's claims are inaccurate or incomplete, and it bypasses the critical step of understanding how the AI will interact with HCL's specific systems and client data. A third incorrect approach is to conduct a superficial assessment that only considers obvious technical risks, neglecting broader societal or ethical implications like job displacement or the potential for misuse. This narrow focus is insufficient for a comprehensive impact assessment, as it fails to address the full spectrum of risks associated with AI, which can have significant ethical and reputational consequences and may contravene emerging regulatory expectations around AI governance. Professional reasoning. Professionals should adopt a risk-based approach to AI deployment. This involves establishing a clear framework for AI impact assessments that is integrated into the project lifecycle. Key steps include defining the scope of the assessment, identifying relevant stakeholders, systematically evaluating potential risks across technical, ethical, legal, and operational domains, developing mitigation strategies, and establishing monitoring mechanisms. This structured process ensures that AI technologies are deployed responsibly, ethically, and in compliance with all applicable regulations, fostering trust and long-term sustainability. Question 17. The monitoring system demonstrates a slight but consistent increase in latency for a critical trading application over the past week. A proposed system update is identified as a potential cause, but the development team believes it is unlikely to be the sole factor and suggests proceeding with the update to address other identified performance bottlenecks. Which of the following represents the most professionally responsible approach to managing the situation? Option A. Defer the detailed impact assessment until after the system update is deployed, and then monitor for any further changes in latency. Option B. Proceed with the system update immediately to address other performance bottlenecks, assuming the latency increase is a temporary anomaly that will resolve itself or is unrelated to the update. Option C. Conduct a detailed impact assessment to thoroughly analyze the potential effects of the proposed update on the trading application's latency and other critical performance indicators, and document all findings and mitigation strategies before proceeding. Option D. Perform a quick, informal review of the system logs to confirm the latency increase is minor, and then proceed with the update, as a formal assessment would delay necessary improvements. The correct answer is C. Conduct a detailed impact assessment to thoroughly analyze the potential effects of the proposed update on the trading application's latency and other critical performance indicators, and document all findings and mitigation strategies before proceeding. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between the immediate need for system stability and the long-term implications of ignoring potential performance degradation. The pressure to maintain uptime can lead to short-sighted decisions that might mask underlying issues, ultimately impacting client trust and regulatory compliance. Careful judgment is required to balance immediate operational demands with the imperative of thorough impact assessment. Correct approach analysis. The correct approach involves a systematic and documented impact assessment. This aligns with best professional practices and regulatory expectations for change management and risk mitigation. By thoroughly analyzing the potential consequences of the proposed change on system performance, data integrity, and client service levels, the team can make an informed decision. This process ensures that any risks are identified, understood, and either mitigated or accepted with full awareness. Such a structured approach is crucial for demonstrating due diligence, adhering to internal governance, and satisfying potential regulatory scrutiny regarding the stability and reliability of financial systems. Incorrect approaches analysis. One incorrect approach involves proceeding with the change without a formal impact assessment, relying solely on anecdotal evidence of system stability. This is professionally unacceptable, as it bypasses critical risk management procedures. It represents a failure to adhere to established change control policies, which are often mandated by regulatory bodies to ensure the integrity and security of financial systems. This approach risks introducing unforeseen issues that could lead to service disruptions, data corruption, or security breaches, all of which carry significant regulatory and reputational consequences. Another incorrect approach is to defer the impact assessment indefinitely, prioritizing immediate system fixes over a comprehensive understanding of the change's broader effects. This is ethically problematic as it knowingly postpones a necessary risk evaluation. It demonstrates a lack of commitment to robust operational management and can be interpreted as a disregard for potential downstream impacts on clients and the broader financial ecosystem. Regulators expect proactive risk management, not the deferral of critical assessments. A third incorrect approach is to conduct a superficial impact assessment that only considers immediate, obvious performance metrics, neglecting secondary or cascading effects. This is professionally deficient because it fails to meet the standard of a thorough risk evaluation. It may satisfy a procedural requirement, but does not fulfill the spirit of impact assessment, which is to uncover all material risks. This can lead to unexpected failures that are more difficult and costly to resolve, and it undermines the credibility of the assessment process in the eyes of both management and regulators. Professional reasoning. Professionals should adopt a decision-making framework that prioritizes a structured and comprehensive impact assessment for any proposed system change, especially in a regulated environment. This framework should include 1. Clearly defining the scope of the assessment. 2. Identifying all potential stakeholders and their concerns. 3. Systematically evaluating direct and indirect impacts across performance, security, data, and client experience. 4. Documenting all findings and proposed mitigation strategies. And 5. Obtaining formal approval based on the assessment results before proceeding with the change. This methodical approach ensures accountability, transparency, and adherence to regulatory and ethical standards. Question 18. Benchmark analysis indicates that a new customer relationship management (CRM) system is being considered for implementation within HCL Technologies to enhance sales and service operations. The project team is under pressure to deploy the system quickly to capitalize on a perceived market opportunity. Which of the following approaches to assessing the impact of this new CRM system best aligns with professional best practices and regulatory expectations for technology deployment of this nature? Option A. Conduct a thorough impact assessment that scrutinizes the system's effects on existing workflows, data security, privacy compliance, and integration with other critical business systems, developing mitigation strategies for identified risks before proceeding with deployment. Option B. Form a brief, high-level review focusing only on the core functionalities of the CRM system, assuming that any integration or compliance issues will be minor and can be addressed after the system is operational. Option C. Rely primarily on the vendor's claims about the system's capabilities and security features, assuming that their assurances are sufficient to meet HCL Technologies' operational and regulatory requirements. Option D. Postpone the detailed impact assessment until after the CRM system has been fully deployed, planning to identify and rectify any problems that arise through post-implementation troubleshooting and patches. The correct answer is A. Conduct a thorough impact assessment that scrutinizes the system's effects on existing workflows, data security, privacy compliance, and integration with other critical business systems, developing mitigation strategies for identified risks before proceeding with deployment. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires balancing the immediate need for a new system with the potential for significant disruption and unforeseen consequences. The pressure to deliver quickly can lead to shortcuts that bypass crucial impact assessment steps, risking regulatory noncompliance, operational failures, and reputational damage. Careful judgment is required to ensure that the assessment is thorough, even under time constraints. Correct approach analysis. The correct approach involves a comprehensive impact assessment that considers all potential ramifications of the new system. This includes evaluating its effect on existing processes, data integrity, security protocols, and importantly, compliance with relevant regulations. In the context of HCL Technologies, this would align with industry best practices and any internal governance frameworks that mandate such assessments to ensure that technology implementations are robust, secure, and compliant with data protection and privacy laws. This proactive approach minimizes risks and ensures that the organization is prepared for any challenges. Incorrect approaches analysis. One incorrect approach involves proceeding with the implementation based solely on vendor assurances without independent verification. This fails to meet the professional obligation to conduct due diligence. It risks overlooking critical vulnerabilities or compliance gaps that the vendor may not have disclosed or fully understood, potentially leading to breaches of data privacy regulations or security standards. Another incorrect approach is to conduct a superficial assessment that only considers the technical aspects of the system, neglecting its broader operational and regulatory implications. This oversight can result in the system not integrating smoothly with existing workflows, causing inefficiencies, or worse, violating compliance requirements related to data handling or reporting. This demonstrates a failure to understand the holistic impact of technological change. A further incorrect approach is to delay the impact assessment until after the system is live, relying on post-implementation fixes. This is a reactive and irresponsible strategy. It significantly increases the risk of immediate operational disruption, data loss, or regulatory penalties. It also demonstrates a lack of foresight and a disregard for established risk management principles, which are fundamental to professional IT deployment. Professional reasoning. Professionals should adopt a structured, risk-based approach to impact assessment. This involves clearly defining the scope of the assessment, identifying all stakeholders, and systematically evaluating potential impacts across technical, operational, financial, and regulatory domains. Prioritizing risks and developing mitigation plans before implementation is crucial. Regular reviews and updates to the assessment throughout the project lifecycle ensure that emerging issues are addressed promptly. This systematic process, grounded in due diligence and risk management, is essential for successful and compliant technology adoption. Question 19. The control framework reveals a new client relationship management system is urgently required to improve sales efficiency, but the implementation timeline is aggressive, with minimal time allocated for a comprehensive impact assessment. Which approach best balances the business need with responsible system deployment and regulatory adherence? Option A. Conduct a detailed, documented impact assessment covering technical, operational, client data, security, and regulatory implications, developing mitigation strategies before full implementation. Option B. Delegate the entire impact assessment process to the IT department without involving business units or compliance teams. Option C. Perform a brief, informal assessment focusing only on the technical aspects of the new system, assuming other areas will be unaffected. Option D. Proceed with the system implementation immediately, relying on the development team's assurances of minimal disruption, and address any issues that arise post-launch. The correct answer is A. Conduct a detailed, documented impact assessment covering technical, operational, client data, security, and regulatory implications, developing mitigation strategies before full implementation. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between the immediate need for a new system to meet business objectives and the potential for unforeseen negative consequences that could impact clients, data integrity, and regulatory compliance. The pressure to deliver quickly can lead to shortcuts that bypass crucial impact assessment steps, creating a significant risk of non-compliance and reputational damage. Careful judgment is required to balance business urgency with the imperative of responsible system implementation. Correct approach analysis. The correct approach involves conducting a thorough and documented impact assessment before proceeding with the system implementation. This aligns with best professional practices and regulatory expectations for responsible technology deployment. Such an assessment would identify potential risks to data privacy, security, operational continuity, and client service, allowing for the development of mitigation strategies. This proactive approach ensures that the organization understands and addresses potential adverse effects, thereby safeguarding client interests and maintaining compliance with relevant data protection and financial services regulations, such as those overseen by the Financial Conduct Authority, FCA, in the UK. It demonstrates a commitment to ethical conduct and robust risk management. Incorrect approaches analysis. One incorrect approach would be to proceed with the implementation without any formal impact assessment, relying solely on the development team's assurances. This represents a significant regulatory and ethical failure. It violates principles of due diligence and risk management, potentially leading to breaches of data protection laws, e.g., GDPR if applicable to client data handled by HCL technologies, and industry-specific regulations that mandate risk assessment for new systems. Such a failure could result in substantial fines, legal action, and severe reputational damage. Another incorrect approach would be to conduct a superficial assessment that only considers the immediate technical feasibility and ignores broader implications like client data handling, regulatory reporting, or potential system downtime. This is also professionally unacceptable, as it fails to meet the spirit and often the letter of regulatory requirements for comprehensive risk evaluation. It demonstrates a lack of understanding of the interconnectedness of systems, data, and regulatory obligations, leading to potential noncompliance and harm to stakeholders. A third incorrect approach might be to delegate the impact assessment solely to the IT department, without involving relevant business units or compliance officers. This siloed approach is flawed because IT may not fully grasp the business-specific risks or the nuances of regulatory requirements. This can lead to an incomplete assessment, overlooking critical areas of impact, and thereby failing to adequately protect the organization and its clients from potential harm and regulatory scrutiny. Professional reasoning. Professionals should adopt a structured decision-making process that prioritizes a comprehensive impact assessment. This process should involve 1. Identifying all stakeholders and potential impacts: technical, operational, client, regulatory, legal, ethical. 2. Defining clear assessment criteria and methodologies. 3. Gathering relevant data and expert input. 4. Documenting findings and proposed mitigation strategies. 5. Obtaining formal approval based on the assessment results before proceeding with implementation. This systematic approach ensures that decisions are informed, risks are managed, and compliance is maintained. Question 20. System analysis indicates that HCL Technologies is planning a significant upgrade to its core client data management system. This upgrade aims to enhance security features and introduce new analytical capabilities. The project team is considering several deployment strategies. Which strategy best balances the need for innovation with the imperative of regulatory compliance and operational stability? Option A. An immediate, full-scale deployment of the upgraded system across all environments to realize the benefits of enhanced security and analytics as quickly as possible. Option B. A deployment that relies heavily on vendor-provided testing with minimal internal validation to expedite the launch. Option C. A phased rollout of the upgraded system, starting with a pilot group of internal users, followed by gradual expansion to client-facing operations after extensive testing and impact analysis across all affected business units. Option D. A deployment strategy that prioritizes the new analytical capabilities, with security enhancements to be addressed in a subsequent, separate upgrade cycle. The correct answer is C. A phased rollout of the upgraded system, starting with a pilot group of internal users, followed by gradual expansion to client-facing operations after extensive testing and impact analysis across all affected business units. Explanation. This scenario presents a professional challenge due to the inherent uncertainty and potential for significant disruption associated with a major system upgrade. The core difficulty lies in balancing the need for progress and innovation with the imperative to maintain operational stability and protect client data, all within the strictures of regulatory compliance. Careful judgment is required to identify and mitigate risks effectively without unduly hindering business operations. The correct approach represents best professional practice because it prioritizes a structured, phased rollout, informed by thorough impact assessment and robust testing. This aligns with regulatory expectations for due diligence and risk management. Specifically, it demonstrates a commitment to understanding the potential consequences of the upgrade across all affected systems and business units, ensuring that any adverse impacts are identified and addressed proactively. This proactive stance is crucial for maintaining data integrity, confidentiality, and availability, which are fundamental tenets of data protection regulations. Furthermore, a phased approach allows for controlled learning and adaptation, minimizing the risk of widespread failure and enabling swift remediation if issues arise. This methodical process is ethically sound as it prioritizes the security and continuity of service for clients. An incorrect approach that focuses solely on the technical aspects of the upgrade, neglecting the broader business and client implications, fails to meet regulatory requirements for comprehensive risk assessment. Such an approach could lead to unforeseen operational disruptions, data breaches, or noncompliance with data handling regulations, all of which carry significant legal and reputational consequences. Another incorrect approach that bypasses thorough testing in favor of speed demonstrates a disregard for due diligence and a failure to uphold professional standards of care. This increases the likelihood of introducing critical errors into the production environment, potentially compromising client data and violating regulatory mandates for system security and reliability. A third incorrect approach that delays communication with stakeholders about potential impacts creates an environment of distrust and can lead to significant business disruption when issues inevitably surface without prior warning. This lack of transparency is ethically questionable and can result in regulatory scrutiny for failing to adequately inform affected parties of risks. Professionals should employ a decision-making framework that begins with a clear understanding of the project's objectives and scope. This should be followed by a comprehensive impact assessment that considers technical, operational, business, and client-facing dimensions. Risk identification and mitigation planning are paramount, with a strong emphasis on testing and validation. Continuous communication with all stakeholders, including regulatory bodies where appropriate, is essential. Finally, a phased implementation strategy, coupled with robust monitoring and incident response plans, ensures a controlled and responsible deployment.